Hey there, Prez.
Hey, how you doing?
Pretty good. All right. So, anybody
You was waiting
tuning
for me to
in?
say Miss
Huh?
Lisa. You was waiting for me to say Miss Lisa.
Absolutely not. Absolutely not. So, yeah, Prez. Last night I was listening to some old music and I was listening to well, first got started I was listening to Pebbles Mercedes. Do you remember that song? Do you remember
Yeah,
Pebbles? Yeah, okay. So, first I came
I
home
sure
singing
do.
that song. Came home singing that song because I was at the store and it was playing. And then a little later on, I was listening to Patti LaBelle and Michael McDonald on my own.
Wow.
So
Uh-huh.
I don't know if you remember that one,
I
but
do.
I wasn't singing earlier when I saw your message, but I was reciting those lyrics to myself because I was like, "Where is Prez? Where is Prez? He left me here all by myself."
Why did it end this way?
Yes. This wasn't how it was supposed to be. Yes. Okay. So I'm not going to sing anymore, guys. Don't worry. Don't worry. Um, so thanks for tuning in, everyone. This is not our normal time slot, but I was live at 3 o'clock. Also, I was trying to hold it down a little bit because press was a little delayed, but we are coming to you with a Sunday live stream, anyways, at 7 p.m. today instead. So, Prez, do you want to start by sharing the topic of the day?
Basically, the topic is I'm gonna try to keep it short and simple. All profit isn't good profit. That's basically the topic of today, this evening.
Okay.
Now we have a few key
So,
points that we're going to be going over, of course, when it comes to this topic. Um, Lisa, would you like to start, or would you want me to continue?
all right, let's start with high yield dividend stocks, because I know that is something that you wanted to stress the importance of not just chasing the dividend yield. So you want to get started? Well, you let me know, Prez. I don't know. Are you throwing it back to me to talk now, or do you want to get going on into that a little bit?
Basically, I've been getting a lot of questions about different like high yield dividend companies and ETFs for that matter, and then I'll go and I'll take a look at a lot of them. And yeah, the yield will be extremely high, but I'll see the expense ratio, and then I'll see the overall share performance, the price action of this particular company that they're asking me to take a look at, and um, there's a lot of cons when it comes to and making choosing these type of investments as a long-term strategy because of one, a high expense ratio, two, they're not very good long-term strategies because some of these like leverage ETFs and things of that nature have time decay already baked into the price action, so you could be potentially losing your high yield gains or paying a lot of it back in fees and taxes and things of that nature.
Hmm. Hmm. Okay, so for those of you that don't know, there are certain investments that pay a dividend. Give you basically a little piece, a little bit of the share of the profits on a monthly, quarterly, or annually basis. And with that, instead of, for example, if it's an individual company, instead of reinvesting that money back into the company, they have a certain percentage allocated to give to their shareholders. And they do this with the intent, I believe, that the shareholder will then buy more stock, reinvest it back into the company. So they're giving it to you, but at the same time, they want to encourage you to give it back and continue to build into the company, build into the share size that you have in your portfolio. So with that, you have to weigh the good and the bad, like Prez is saying. This company, are they really in the place that they have the additional profits to be paying out such a high dividend to the investor, or are they trying to entice you with the dividends and they really should be investing back into themselves and concentrating on other things. Much of the earnings, so let me get into some other things that I was thinking about. Okay. So is it going to be sustainable long term? The company, they need to ensure that actually, well, let me rewind. They do not, you have to realize with the dividend yield, you invest for the dividend yield, and the company can pause or eliminate a dividend. So you have to just be ready for all of it and just have your eyes open and do your research to know if cha- chasing or investing into something based on their dividend, you have to have the whole picture in getting into it. Prez, what are your thoughts on what I'm saying here?
I see in the comments that Fast Eddie did made a good point. He says the other problem is their stock price usually goes down the amount of their dividend, and I've noticed that to be true in a lot of cases from
Yes.
different companies that I've had on my watch list and thought about, investing into them because I saw this such a high dividend yield. Like, yeah, I was almost once victim of chasing high dividend yield as well until I really, really started doing my research. And the more research that I do, the more I figure out that slow and steady wins the race. And it's a marathon at the end of the day and not a sprint. It's like
Mhm.
we always, as investors or newbies into this space, look for ways to try to cut corners and try to make fast gains. And them fast gains is not always the best way to go about doing this investing thing.
Yeah. So, one thing that you can look at, and I mean, this will take some digging on your end to try to figure it out, but how much of the earnings are they using towards paying the dividends? So, like I'm saying, is this something that they can really maintain long term in paying, or is it just something to kind of get you in? So, I know personally in my portfolio, I when I first was investing into Disney for a long length of time while I had Disney in my portfolio, it was under the time frame when they had eliminated their dividend. They have since reinstated it, but I've been through that situation of holding an investment that was a dividend payer, but it was on hold for an extended amount of time. And it even happens with the dividend aristocrats. It could even happen with the dividend king. I think it'll be very rare. A dividend aristocrat's been paying and increasing their dividend for 25 years, and a king is for 50 years. But one example of that has happened recently is AT&T, after being at the aristocrat level, had an adjustment to their dividend payout. So it's better to find a balance of the quality of your investment and make sure you're balancing that with the dividend payment that they have. So I know for me, a monthly dividend payer that I have in my portfolio, but I'm actually slightly down on, is Realty Income, ticker symbol O. Uh, how about you, Prez? Any dividend payers that you're down on, or any other news on a particular company that you wanted to share related to chasing dividend yields, or a solid dividend yielding investment that you know of?
Right now, currently, Realty Income is the only dividend, monthly dividend paying investment that I currently own long term, and it's down, but it's only slightly. It's like maybe not even 1%, something like that. It's like almost at break even, but I'm still
Okay.
getting those monthly dividends on a regular basis. They have not cut their monthly dividends, so I'm not worried as to I don't have any worries as far as is my investment safe or anything like that. Not as of yet, because I just continue to do my research and I continue to stay involved in the news is going on with Realty Income and things of that nature, so that I can move accordingly if any changes do happen. Because you know me, like if the business model of the company changed, then maybe it's time for me to invest my capital elsewhere.
Mm-hmm. Okay. So yeah, and for me right now, I'm still trying to build up my position. So I'm not pulling my dividends out. They're either going to go into my, remain in my cash balance or just be reinvested back into the same. Just have the drip on and just have it automatically going back into the same investment. So there are tax implications of, it is taxable income, your dividend payments. So you got to just take everything about your investing into account when you're trying to make your plan. So, but I do love
Hmm.
the investments choices that I've made. I have three monthly paying dividend investments right now, which are Realty Income, SPHD, and Main Street Capital. So, any thoughts on Coca
Any thoughts on
Cola? And
Coca-Cola and PepsiCo? I like Coca-Cola.
mhm. I don't invest into either one of those, and I couldn't talk about it off the top of my head. Um, I Anything else you want to share on either one of those, Prez? I would need to look them up.
I like Coca-Cola because as far as the price action is pretty stable. It doesn't really move much, and you pretty much got a stable dividend coming in, and it's just a great company in my opinion. And I prefer to drink Cherry Coke over Pepsi any day. So that's just my personal preference.
I don't have a
And the
preference.
share prices are the price for the shares are actually much cheaper than Pepsi.
Hmm.
You like them both?
Hmm. When I was younger, I used to be a RC cola girl, but I don't have much of a preference anymore. Just
I
diet.
remember those. I haven't seen those in years.
Yeah, I don't think they make that anymore. Um, but anything else you want to share on topic number one, high yield dividend stocks? They may be appealing due to their income potential, but there are things to consider. And is it really worth it? So, nothing else?
That is correct. I can remember seeing I can't remember the content creator's name, but they were sharing their portfolio, and they had one really extremely high dividend paying company. And I looked at
Mhm.
the company and did a little research. I'm like, they had to be chasing the high yield, but they were in the video complaining about them being so significantly down in that position. They only had two positions. They had Realty Income, and it was this particular company. I can't remember. I can't even remember the company. I just remember feeling a pain when they was talking, in the video, like, I'm not making any money. I got all of these thousands of dollars invested into this high dividend paying company. I'm getting a nice dividend, but I'm down. I'm down
But your
almost
share price is
8%. I'm
in the
like,
dump.
wow, yeah.
Okay. So,
That's just something that I want a lot of people to be aware of. Like, don't be in a hurry to make a profit. So quick in a hurry to make a profit. Slow and steady wins the race at the end of the day. It's like it's really simple to just invest into VTI and VOO until you gain the knowledge to learn how to actually research these individual companies. I will get up here and say this every week because everything that look good ain't good, especially with these high and leverage ETFs and things of that nature. They're very high risk and they're not very good long term strategy, in my opinion, as far as investing is concerned.
okay. So I see Dee says that she's been investing into Coca Cola for many years now. Let's see. So, Coca Cola, take a look at Coca Cola on the month. So, up 1.14% on the month. Their dividend yield is 3.05. And Pepsi is down 4.61%. Their dividend yield is 3.29%. So close in dividend, but I guess, you could really You only really need to do some research on the company itself and see what factors have been impacting the stock price. Let's look on the year. Pepsi is down on the year, nearly 11% on the year. Hmm. And Pepsi's up, Coca-Cola's up 6.4%. Neither one of those are, even the percentage that Coca-Cola's up is not anything significant. I would say many other individual stocks are up more than that on the year. So nothing that I've ever explored investing into, but there are so many different companies that you can invest into. So, and also had a question here about SCHD over SPHD. So I currently am investing into both of those. How about you and your portfolio, Press?
I'm not even sure which one I would pick because they both are very good. I probably would. I don't have either right now currently,
Oh,
but
you
I do
don't?
plan on end up acquiring both. I can't
Hmm.
pick either one. That's a tough one right there because I
Yeah,
like
I've
them
been,
both.
yeah. So I started off with SPHD when I was starting my dividend portfolio. So it's been over a year now. And it fit back then. I think even now, I don't think that that would be an eligible investment on Moo Moo to do fractional shares. So that kind of factored into my choice of when I got started on the portfolio. I wanted some investment choices that were, that I wanted to choose for the long term, but I was also choosing it for an affordable share price because I was going to buy full shares at that time. But both of them are good choices to me. Like I said, I'm holding them both in my portfolio. SCHD is definitely more of a popular choice among dividend investors, especially those who've been investing into it for a while when the price was lower. I'm sure that they're seeing their quarterly dividend as well as significant growth in their stock price. So, all right, I don't
I
think I see
was
any
able
other.
to purchase a fractional share of ETI or more.
Mhm. Yes, on Moomoo there is a way that you can go in and look,
Did you hear
but
me?
yes, I did. There are some things I haven't checked, within the last week or so, but they seem like they were. There's an easy way to check, but not every single investment choice over there was available for it. But definitely, what you mentioned and like all the Mag 7, you can do fractional shares on those.
No, I
I don't
haven't
know
had a
what the
chance to look at Siri.
okay.
I haven't had a chance yet, but now I have my notepad right here. I will write it down so I won't forget this time. I actually forgot. I'm sorry.
Mhm. So, does anyone in the chat have any examples of
He
something that they
probably asked me one day I didn't have my notepad handy.
okay. Does anyone in the chat have any examples of anything that you invested into because of the dividend, but now the stock price is down? Because I think that's the whole point of why you wanted to bring this up, Prez, is that we have to make sure to be striving for the balance of uh, sustainable payment of our dividends, as well as even if it's not too much, but steady um, consistency in our stock price not pulling way back or something, may not be a strong growth uh, price on the stock and have the dividend also, but somewhat of a balance. You don't want to be 20% down on your stock and still getting your dividend, but stuck with a stock that is down so low that you're going to be holding it with the hopes that it comes back.
Exactly.
Okay. All
Exactly.
right.
My
So,
point exactly. The same as with these leverage ETFs. Like I hear a lot of people ask me about like SQQQ and TQQQ. Those are long-term traders use to potentially make quick gains. That's something that day traders use. I wouldn't recommend long-term investing into any leveraged ETF for any reason.
mhm, mhm. Okay. So, let's move on to our second topic: high expense ratios and ETFs. So, the ETF, the expense ratio reflects the annual fees that you have to pay for an investment that are not, you don't have to pay, that are taken out of your investment when you invest into an ETF. So ratios below 1%, well below 1%, in my opinion. I aim to be at uh, 0.02, 0.03, around there when I'm choosing an ETF, because for the things that I want to have exposure to, I know that I can find a choice that has an expense ratio that fits into what I just said. So even though 1% might not sound like much, when it comes to something like this, I think it's very significant. And I would not be choosing, like, for example, to have exposure to technology. I wouldn't be choosing an expense ratio that was close to 1%. So, high fees are going to eat at your returns. So it doesn't make sense for me personally to choose, for example, the SPY or QQQ over VTI or VOO, which are going to be something highly technology, or something else that kind of is built off of or is predominantly investing into, the Mag 7 or the top 10 or 15 investments in the S&P 500. So, Prez, why do you think that people are getting off track on this point?
Mainly psychology and mindset. They are looking for faster gains, simply because just long-term investing can get a bit boring, especially when you invest in small amounts, like say $5 a day or $10 a day, and you see the progress of others that have a lot more skin in the game, and you want to get there yourself, and it's a human reaction, it's human nature. But I just want to get out there that I need you guys to try your best to exercise patience when it comes to investing for the long term, because like I always say, it's a marathon at the end of the day, and it's not a sprint. All profits aren't good profits at the end of the day. You could be potentially setting yourself up thinking you're going to get a fast profit, and you end up getting a fast loss.
Hmm. Hmm. I think that this is also, people need to evaluate their retirement accounts to make sure that their brokerage company does not have these fees, because that's where most likely you're going to be having your largest amount of money. So I was talking to someone recently, and they were like, I think their attitude was like, I work for good companies, they know what they're doing. And I'm like, you need to evaluate these things for yourself and not just be so trusting that someone else has your best interests in mind, because those fees that they're charging you, that's what's going to help them pay their employees and bring money into the company. So I can't always be thinking that someone is going to be trying to make me money, even though you would think they're trying to prepare Lisa for retirement. This is their job, but you have to open your eyes to make sure, just like with everything, with your healthcare, with everything, you have to advocate for yourself, is my feeling, because I can't trust that someone else has my best interests in mind. I have found this in my own personal life and in helping others, that there were fees and expense ratios that that we were able to find a different investment choice. I personally moved from empowerment to Fidelity, a large sum of money, towards the end of last year, because I just I opened my eyes to what was going on and just could not find anything there that I thought could compare to what I could be achieving over at Fidelity. And I'm not here to lose any money. I'm here to make money. I am my priority. And I could see that these companies, the way they had things structured, I was not their priority. So anything in particular that like made you, is it just that people are always asking you about certain ETFs and you're like, think to yourself, like, why are they even interested in that, considering the fees? Yeah.
Yeah. Yeah. The first thing I do when somebody asks me about a particular ETF is I look at the expense ratio.
Mm-hmm. Mm-hmm. Yeah. The performance, you have to
Once
take
I see the
everything
expense
into.
ratio, I'm like, wow.
Okay, so Dee's with me. She's enjoying her experience at Fidelity also. And Prez, you use Fidelity, right?
Yes.
Yeah. Are we having a delay
I
or?
love it because you can open up multiple different portfolios inside of it.
Okay. Okay.
It seems a little slight delay.
Mm-hmm. Mm-hmm.
I love Fidelity because it's so you can do so much on it, and I really don't have no complaints. I can open up multiple different types of portfolios and things. Did you catch that?
Yeah. Yeah, it's getting glitchy. I'm having trouble hearing you. But let's keep going. Yeah, I can't say that I really tap into tools at Fidelity, but Tim says they have some great tools on there. All right. So that's my filler. I always say so all throughout my videos. And let's get going. So fast gains versus consistent gains. That's our next point. Short-term capital gains. Consider the impact of fees on your overall returns. So, yes, taxes and fees. I think when I first got started, I was just doing so much investing. I really didn't take it into consideration, but I have to be more mindful of it now, especially in my current situation where I will most likely be doing more options trading. So, what has been the impact that you found um, from this obstacle of the fast gains? Are people being responsible and getting themselves prepared for the tax implications?
My
Prez.
experience, I can speak from my experience alone.
Mm-hmm.
Wanting a fast gain, and I end up getting a fast loss. You understand what I'm saying? And you want to try to protect as much of your capital as you possibly can. It's like risk management at the end of the day. And no matter how much you can potentially make in the stock market, you want to try to protect your gains.
I don't understand, Prez. In what way? You're saying you wanted that fast. What
And
impacted you to
try to
not?
minimize your risk to the downside. Now, when you want fast,
Can you hear me, Press?
Yes.
I don't
Yes, I hear
understand.
you.
What is it? What part of it? What impacted you with the fact? Okay, so you made a lump sum or whatever. You did some option trade. You made $1,000. You made the fast gain. So what are you saying impacted you in what you're trying to share here? It's not clear to me.
What what I'm trying to share here is like when you're in this space and you're expecting a fast gain,
Hmm.
you tend to take want to take on a lot more risk, and you potentially open yourself up for a much larger loss versus just investing over the long term and grasping the concept that slow and steady wins the race in this game, and you want to be in as many safe assets as you possibly can versus the high yield and the fast returns and the fast gains and things of that nature, because you're going to end up losing more than you're actually gaining over the long term versus just long term investing.
Okay, okay. So like one day I was in your live stream one morning last week, and someone was saying like, how many contracts do you buy? And I said I usually buy, if it's a higher price I probably buy one or two, if it's a lower price maybe four or five. So is your encouragement that I should stay with that? Say if I buy two contracts and I make $100 off of each, keep it to that, as opposed to opening up my risk of buying four contracts and potentially making $400, just steadily make $100 at a time, as opposed to the percentage of loss that I could take on if I buy four contracts as opposed to one. Yeah. Okay. I guess when you
Correct.
shared the, all right. Surprise, we seem to be having the technical issues we were having last week again.
I'm so sorry. What I'm
Okay.
saying is, yes, that's correct. I totally agree with you. Position size, like when you get a substantial, you say for example, you took on a large trade or investment choice or something like that, and you made a ton of money, and
Hmm.
you try it again, you might end up losing everything you just gained and then some because of your position size, and you just exercise zero risk management whatsoever. You
Okay. I hear what you're saying. I hear what you're saying. Um, all right. So, another point that I'm going to leave to you to, I hope clearly, I hope audio wise, you can clearly chat with us about the leverage ETFs.
okay, leverage ETFs, for example, your TQQQ or your SQQQ, they're like basically the fund managers are trading covered calls
Yeah,
or
President.
cash secure puts or something like that. And oh no, it tends
We're
to
not
cause the
hearing
share
you.
price to move faster than your regular company. You can't hear
Mhm.
me at all.
It was out. I can hear you now, but it a few seconds back it was just completely out for me. So if you could just start over on that again.
Okay, a leveraged ETF is basically the fund manager is trading cover calls or cash secured puts, and it causes the actual share price to move a lot faster than your traditional stock or ETF for that matter. And it's a tool that a lot of day traders and swing traders use to gain fast profits. They are not they are not long-term investments at all, in my opinion.
Hmm. All right. I don't think I don't I've never had the exposure to it, so I didn't it wasn't a concern to me, but I think it's a great point to share with people so that you can be prepared for whatever might be presented to you. So Are there any? I did a so um, while we had to postpone our live from our regular time slot, I was talking about things that you could incorporate into your investing strategy all the time, but especially right now, just giving some food for thought as we're going into the second half of the year. Tomorrow will start July, and before you know it, it'll be 2025. So, what are some of your investing goals for the second half of the year, Press?
Basically, some of my investment goals are to stay consistent, and if the market does start to take a turn for the downside, then I could potentially double down on my daily investing habits and things of that nature. Whereas though I'm trying to create other streams of income so that I'm able to invest more as the market comes down. If that's the case, also pay off a lot, more debt. Get on top of paying off a lot more debt, getting that out of the way. Those are my main two financial goals for
Yes,
the
debt.
last 2 quarters of this year.
Okay, okay. Yes, that was the first point in my discussion earlier. That once you get rid of the debt, then it's definitely you won't have to be. Once you get rid of the debt, have your emergency funds, then you can really move forward with your investing without that obstacle of having to be pulled back into um, battling that high interest credit card debt, not having money put aside when new issues come up. So those are great points to be focused on. um so do you well, I know you keep your portfolio balanced all of the time. Do you have any encouragement to share for people, like I said, at this point of the year, moving forward, this would be a good time to check, is your portfolio diversified? Is there any adjustments that are needed? Why are you smiling so big, Press?
I'm waiting to hear what you're gonna ask
Oh,
me.
so I sometimes I put questions on my community wall. I know this is a question I probably put, but I don't have it handy. How often do you look at your portfolio performance? How often do you look at your retirement and stuff like that? I think there are lots of people that are not looking enough. You and I may look too much. Like you were saying, we're looking at it on the weekends when we know it's not going to even move. But that's how we are. Is there anything you want to share about just making sure that you're balanced, making strides to how to get your portfolio in a better position if you are over, if you're not diversified? Anything you want to share on that?
First, I want to start off by saying the market is closed today, and I've looked at my portfolio 3 times today alone.
I'm sure you did.
But okay, the how can I answer that question is I would just simply pay attention to the percentage allocation of each position and figure out which ones that you need to work on and just work on them. Just dollar all balanced out on top of things. It's really just that
Mhm.
simple. Just pay attention to the portfolio weight of each position and make sure you keep it allocated according to your own strategy.
Mhm. Mhm. Excuse me. Okay. So I put this down. Prez is usually the one out of the two of us that makes that chooses the topic and the agenda. And I was telling Prez one day, I was in a meeting, and the icebreaker question was, what would I do with $1 million? So let's assume, and please, guys, answer this in the chat also. you have $1 million, the taxes are already taken out of it. What are some things, what are you going to be doing with the million? Prez, you answer, and then I'll tell you what I answered in my meeting, and I'll tell you about the reaction that I got. But you go first.
First, I will pay off all of my debt. That would be the first thing that I do. And the rest, I will put it in a high yield savings
Mm-hmm.
account. And with the interest, I would invest the interest that I'm making off of what's in the high yield savings account.
Okay, that's it. That's it, Prez. The
That's
whole
it.
$1 million.
I would act like I never
That's it.
even
Okay.
got it. I would pay off all of my debt.
Um,
Then I would put the rest of it into a high yield savings account, and I would take the interest and I would invest the interest
why are you only investing the interest? Why aren't you investing more of a portion of it? Why aren't you
because I don't want
investing?
I don't want to lose focus on the discipline. I just $1 million just fell in my lap. I wasn't
Okay.
ready for it. I'd never seen
So you would take it slow.
$1 million before, so I wouldn't know what to do with it.
Hmm. All right. So in my meeting, a few people answered the questions before it got to me, and it was virtual, but I was on camera when I answered the question. But I wasn't looking at everyone as I was answering what I would do with the $1 million. So a few people answered before me, and they were answering about, oh, we're going to go on this vacation and buy all these fabulous things, and all these philanthropic donations to this and that and the other. And then they get to me, and I basically said what Prez said. I'm going to get this money positioned into dividend paying investments and into a savings account, and I'm going to see how much money, how much interest it can gain for me. Interest slash dividends it can gain for me on a monthly basis, so that I could see if this would be a definite point that, yeah, I don't have to go to work anymore. So there was no vacation, there was no spending, there was no, in my story, in my answer to and everyone was and then someone said to me, Lisa, were you looking at everyone's face as you were going on about this dividend, this monthly paying dividend, this and that and the other? Everyone was like, what is she talking about? But that's what I would do. So let's see what people are sharing. Eddie said he's going to Vegas with the million. Um, Dee said she is retiring her dad and herself and doing home upgrades and investing. Now, Dee is on track with, debt repayment and mortgage repayment. So maybe she would be closer to being able to, just say I'm retired than I am. I do. When I say that I'm debt free, I do have, I don't have credit card debt. I pay my credit cards, as the I try to pay it off immediately on a monthly basis. Unless it's an interest free, unless I have an interest free deal, then I may not rush to pay it. But I'm not going to pay any interest on credit cards. But I do have two mortgages because I have a rental property and my main home. So that's what I mean when I say I don't have debt. I do have mortgage debt though. um, Pay off debt, invest half of the rest. Make sure I have enough dividend income to live comfortably and put the rest in a high yield savings. So, yeah, everyone is, well, not everyone. Like I said, Eddie said he's going to Vegas, but David sounds like he is on board with our plan, Prez. Dividends, interest, investing. So is
Mhm.
D. Yes. Okay. So yes, D, if you ever check out D's channel, she is almost 100% debt free and only has her mortgage. And I know that she's making strides to get rid of that also. So, all right. Let's see any other answers on that. Brother of a certain age. So pay off debt, buy two fourplexes, high yield savings, continue to work the 9 to 5, and contribute to the 403b. Yes. I will take a fourplex. I would love that. So,
Yeah, I would. I would.
Prez, why don't you take a little station break for your channel? Are we able to hear you clearly right now? I hope we are.
Can you hear me?
Yes, I do.
Oh, okay. So I do go live every Monday, Wednesday, and Friday at 9:15 a.m. And every Saturday at 2 p.m. I have a portfolio update that I premiere every Saturday at 2 p.m. where I've been investing $5 a day. And I basically break down the portfolio with in front of my audience. I don't do it live, but it's a recorded video. But you are able to interact
Mm,
with me in the chat while the video was premiering if you get there at 2 p.m.
okay. Yeah, we're having a little bit of trouble hearing you again, Prez. But yes, I will be tuning in to your morning lives this week. And I'll be able to pay a little bit more attention than usual. And you know why. And what else? Okay. So I would like to earlier on in my live, I don't think everyone was here at that time. I'm not sure if Miss Frugal is still here, but I wanted to thank her, a brother of a certain age, Nora, everyone that has joined my membership so far. I opened up my membership just a few days ago, and there were 5 people that joined like within the first day or so, and I appreciate y'all for being the first. I haven't seen anyone using their members emojis today though, or unless I missed it. I only have 4 so far, but yeah. Oh, there you go. Miss Frugal, I got a bull and a bear in there.
I
um
see so.
yes. And we've been keeping up with our show every Sunday, 3 p.m. Eastern Standard Time. This is a special late edition today, and I'll be putting out videos regularly. And I'm definitely gonna get started with putting out additional community posts and members only content. So, Press, is there anything else you want to chat about today, or do you want to see if anyone has any Q&A? So I think we actually, unlike that other week when we got through our topic in like 18 minutes or something, and I was like, what's going on? We're just now like really getting through the topics that you laid out for the week. So it seems like
Can
Frez
you
is
hear me?
frozen over there. You was frozen over there, Frez. Maybe
I
we
know.
should
I'm
wrap
looking
it
at
up
it on
for
my
the
phone.
day
I'm like,
because
wow. Like
maybe we should wrap it up for the day because of the connection issues. But let me know. Let me know. Let me see if there's any questions that we missed.
I blame it on StreamYard.
I I don't know. All right. So, Prez, are you frozen over there again?
I'm here.
You're here. Okay. Okay. Anything else you want to cover for today? Prez, I don't know what's going on. Let's take a look at oh no. Now I'm having troubles. Did you guys see that?
The devil is busy.
Is my did my camera glitch out? I'm sorry. I was looking at a black screen over here.
Yeah, it did.
It did? Okay. I think that we're both having a
Hmm.
little bit of technical issues. Thank you everyone for tuning in. We will be back next Sunday in our normal time slot, Press. Prez is a little bit frozen, but on this week we have the 4th of July, so the stock market will be closed on Thursday. But yeah, as you know, you will catch videos from us throughout the week. Prez goes live Monday, Wednesday, Friday, like he said. And just be on the lookout. Make sure that you're subscribed to both of our channels, hit that notification bell, and we'll be coming to you again throughout the week with lots of information. So I appreciate you all for tuning in. Check out my membership that's now available, and that's it. Okay, bye. Prez, any closing words, Prez? Can you hear us?
Yes, I hear you. Can you hear me?
Yep, I hear you. Can you close us out for today?
Thank you guys for tuning in. We apologize for the technical difficulties, but with all that being said, if you don't find a way to make money while you you will work until you die.